I want to move on here and talk a little bit about coronavirus and ETFs a little bit. One thing that's very striking is about how well Europe's doing right now. Tom, you were talking about this. We were talking about this at the end of last week. The Nordic countries are doing really well right now. I don't know if this is entirely because of what's going on with a relatively good situation regarding coronavirus here, but you see the Denmark and ETF up nicely this year. The Nordic ETFs, which is a combination of several countries, all up nicely. Vanguard Europe, which is the broad ETF there for Europe, generally is on the downside. But remember, that includes a lot of southern European countries that have had a tougher time with things. Tom, could you comment on this? What, if anything, is this ETF activity telling us, and is it related at all to coronavirus?
Well, I think there has to be some relation, Bob. You know, when you look at single country ETFs, it tends to be, when you take Europe, for example, those areas like Italy are not doing well with the coronavirus, and their markets aren't doing well. Contrast, Northern Europe, the Nordic regions are actually doing really well. Now, you can lift up the hood and you can see that they have certain sectors that they're overweight. For example, healthcare, industrial materials. In Denmark, which is the majority of that iShares Denmark ETF, EDEN. So you would definitely be able to argue, well, they're not diversified as far as in certain sectors. However, if you look at the Global X Nordic ETF, a bigger sample of the Nordic regions, and actually their banks are doing much better than banks are doing here in the U.S. So something to take into consideration. And I know we also want to touch on China as well, because like it or not, China's done a great job in tackling the virus lately. And there's been a lot of encouragement among the local media in China for investors locally to buy stocks. And that's rewarded the Chinese stock market in a great way, too.
And Jan, I know you run a China ETF, CNXT there, and that's also done well year to date. Is it fair to say that part of the reason it's done a lot better is because a somewhat better outcome than expected, or at least so far, on COVID? Is that a fair observation, or are there other reasons?
No, I think absolutely. I mean, it's really amazing how well China is doing. All the other issues aside, economically, what I like to point out is that the central bank has actually allowed interest rates to rise there over the last couple of months, which means that they're so confident in their economic recovery that they just don't feel like they need to be doing a ton more stimulus. So it's just a sign. The whole thing could be a head fake, but China seems to be growing. I love what I call Dr. Copper, which is copper prices, as an indicator of economic growth globally. And copper is higher than it was before we went into this coronavirus recession. Yeah. So I think that's another sign that actually the global economy is doing pretty well.
Yeah. Ben, you're going to get the final word here on coronavirus. We're about 90% through the earnings season for the second quarter. And the amazing thing that I've seen is companies are beating by much wider estimates than anybody anticipated, 22% above expectations, according to Refinitiv. I think the obvious conclusion is analysts have been a little too pessimistic about what the numbers are going to be, and the third quarter numbers seem to be rising as well. Can you just give me 20 or 30 seconds of where you feel we are in the stock market in terms of how it's interpreting the coronavirus epidemic? Does it have it right, or is it, as a lot of people say, a little disconnected from reality?
I mean, I think the stock market has been ahead of the game in terms of finding the fact that the jobs market bottomed and a lot of these things have started to come back. So I think it's hard to say whether it's gotten too far ahead of itself, but I think the stock market has been maybe smarter than people give it credit for. But if you look at countries like Germany and South Korea and Australia, who have also done better than the U.S. in the crisis, if you look from the bottom when stocks bottomed on March 23rd, those stock markets are up 60, 70% in some cases versus a 50% gain for the S&P. So I think some of these countries who have handled it better are actually seeing some benefits in the stock markets.
Yeah, I would agree with that. The stock market is definitely grading countries and sectors by how well they've been responding or being impacted by COVID. I definitely agree with that.